Hello and welcome everybody to today's very special webinar, Gold and Silver Club Weekly Commodities Review, in alliance with ACM Gold, presented by myself, Phil Carr, and Nick Housey at the Gold and Silver Club. Today, gold is actually breaking out to 2014 highs, just broke out to shy of 1390 about an hour ago. So we've got a lot to cover this afternoon, really interesting market conditions today. And we'll start going through those right now with you. So today we'll be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end-of-week summary for the metals, the energies and agriculture. We'll be looking at gold, silver, oil, natural gas and coffee. We're looking at the top trade of the week. We'll cover live market commentary and technical analysis. We'll certainly take a look at the metals. We'll look at the week ahead, so the 6 key events in the week ahead which will affect the commodities markets. And of course, we'll answer any questions you may have on today's webinar too. So gold price this week has broken out to 6-month highs on China and Ukraine concerns. Gold price soared to 6-month highs today as fears of economic slowdown in China and lingering worries about the standoff in Russia and Ukraine continue to boost the safe haven demand for gold. So on the open of the New York trading session, gold hit $1,387 an ounce to record gold's best run of weekly gains since August 2011. So since gold's low of 1,185 an ounce, prices have gained this year 17.4% year to date since the start of 2014. Gold is one of the top 4 high-performing commodities of 2014. First place being coffee at 53% year to date. Second place, natural gas at 43% year to date. And third place is corn at 24% year to date. And then of course we have gold at 17%. So gold continues to gain over concerns that China's first bond default and weak export data earlier in the week have stoked concerns about the health of the world's second largest economy. So amid concerns about the Chinese economy, the geopolitical tension between Russia and Ukraine is driving gold as demand as a safe haven. So as we enter into the weekend, Ukraine's Crimean region is preparing for a March 16th referendum on splitting away from the Ukrainian region and joining Russia. This could spur further demand of a safe haven for gold as we move into next week and other safe haven assets. So the big question definitely is, will gold price continue to soar and on safe haven demand? It's very interesting where we are right now with the gold price, and we'll talk you through where we can expect really to head next and into next week as well. So before we do so, I'm Phil Carr, a professional trader and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money trading the most lucrative financial markets in the world, the commodities, gold, silver, oil, natural gas, coffee, commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Housey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. So through his first-hand relationship with some of the world's most successful traders, discover the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. We also write for a number of global business and financial publications. We've appeared frequently on financial television. That's a bit of background on the Gold and Silver Club. And we'll take a look at the gold price right now. So we're currently trading at $1,383.5 an ounce. We just broke out from a key level of consolidation about 1 hour ago, above 1376. We'll take a look at that very shortly on our charts as well. Before we do so, the top trade of the week, can you guess what that might have been? Using the Gold and Silver Club's signature trading strategies. It was indeed on gold. We had a lovely breakout. In fact, we've taken the next breakout today. We're currently in positions on gold, riding the current breakout This was midweek when we broke through 1354 key level of resistance, and we've spiked up to 1374. We had a 190-point gain there. The risk on the trade, 100 points risk for each lot traded for a 190-point gain. So $1,900 profit on each lot for a really nice 2-to-1 on the midweek gold breakout. And we're pleased to say we've broken out again today. So there's been more gains as well. So with that, let's take our eye and look at the technical analysis. We'll see what is lining up at the moment for gold, for silver, for oil, and the commodities. So here we can see, if I just move it into the 4-hour time frame, it's fairly visual here. We've had a really nice breakout on gold, and in fact, let me drop this ever so slightly up here just to show you today's breakout that we got. So that was on the 4-hour time frame. We spiked up to 1376 last night, and essentially we've been in this really nice consolidation here for the last day and a half or so, just consolidating between 1360 up to 1376. We did finally break out of that consolidation just this morning, so we've broken out, had a 100-point move to the upside. You can see we're getting a little bit of profit, but there really isn't any major resistance now until $1,414 an ounce. There is a pretty clear run. We expect there to be a psychological resistance level here at 1390, so you often get psychological resistance at round numbers. This is where we may see the next real level of potential profit taking, and then we could see a run up to 1400. This would be the next key level resistance, and then really there's nothing, I mean, in terms of Fibonacci levels, pivot points, and other key levels, there's nothing really to stop gold from continuing now up into the 1400s. The only thing to look at would be the cyclical round numbers. So good at the moment, looking good. I mean, if we take a look at the weekly, been incredibly solid on the weekly charts here. We've continued to break out every week. We've only had one down week so far in 2014. So we've had 4, 5, 6, 7, 8, 9, 10 up weeks, one down week. So very good move on gold so far for the year. We've got a lot of questions about when are we expecting a potential sell-off for gold here. Well, at the moment, we'll be looking at potential resistance levels around 1433. Not really where we spiked up to at the moment. This is the breakout that we're getting at the moment around the 1383 level. Very interested to see where gold closes the week, but it's pretty much closing at weekly highs, at monthly highs, at yearly highs. It's just looking strong across the board at the moment. So we'll see how that closes, but we've got a lot of fundamental news out of Ukraine and Russia, which is likely to give a further bid also for the for a buy. So with that, let me also move over to silver. Okay, so silver has also managed to break out of this downward trend channel. So we've had this downward trend about mid-February here. As we've just continued this downtrend, you can see lower lows here. We have lower highs as well, and we just continued to stay within that, really ricocheting just off the resistance levels, off the support levels, and we finally got a breakout today actually up into this Fibonacci level, the 2164 fib level there. We've broken out to a similar situation to gold at the moment. We've just found a little bit of resistance at this key fib level, so it's at 2164 there. Had a really nice breakout, very solid move. What we'd be expecting next for silver here, the next key level being 22. If we take a look at the weekly, silver has managed to break out this downtrend. The week is looking pretty strong. It's got above the last week's highs here as well. Let's just take a look, and we'll move over to oils as well, so Brent and WTI. Actually, WTI managed to get back above its 50-day moving average today, broke above yesterday's low. We've got a nice solid setup on that earlier on today. If you look at the 4-hour time frame, really nice consolidation. We managed to break above the 98.23 level here, which was a key level of resistance. We've come straight up, and we've found resistance at 98.69. We've just popped up, hit that key level, and that's the next key level that we'll be looking at here as well. So what I'm looking at is another area of consolidation for those of you who like to trade oil. And now we've got another consolidation zone, so we're looking for the price to really get above 98.70 for a solid solid breakout here up to 99 and then clearing up to 99.50. It is very common to get breakout on the oils on Fridays. So we'll definitely be monitoring this right into the close today. I mean, we've got a few hours left until the close, circa 7 hours until we close later on tonight now. So we could see further surges in oil. Be looking out for that. So the next key level to clear here is 98.70 for WTI oil. If we take a look at Brent also doing very nicely here, managing to break out of this downward trending channel that we've got at the moment on oil. You can see this this forming at the moment. Let me just show you that very clearly with the trend lines. In fact, let me put that on the D for you as well. We're on the futures contract at the moment. Okay, so here is the downward trending channel that we've been in on Brent really since the beginning of March. You can see we're just about starting to break out of that today. So obviously Brent and WTI have also been helped along by this breakout that we're getting on the metals at the moment, the commodities sector in general. Generally speaking, we do see when gold's breaking out, we can see that follow through into oil as well. So here we go, we're starting to break out. I'd love to see Brent here for a continued move to break above yesterday's high here. We seem to be on our way at the moment. You can see even right now, we're getting a nice lift up here on Brent. There were some earlier setups. We found support. You can't see it as well here because we're on a futures contract, but if you go into a historical chart, this is a major trend line which we've managed to find support at here for Brent crude oil. So this major level here, this trend line, go back on the chart, go on the weekly and the daily, and you'll see it. That's where the price has bounced off for Brent. Natural gas, it's another really interesting one. Found a little bit of support today. We're finding this key Fibonacci, 4.368. Now, we did break support yesterday on the natural gas inventories. We saw a move lower, but we have found a bit of support here, 4.368. I would just keep an eye out for the monthly. We did have a huge inverse hammer on monthly in February, which did get triggered to the downside. At the moment, we seem to be consolidating just around this key Fibonacci 0.368. Very interested to see how natural gas is going to fare as we go into next week. If we continue to see a breakout on Brent crude oil and also WTI crude oil today, that normally would follow through, particularly WTI crude oil to natural gas as well, and we would expect to move back within this trend channel we've been in, well, back in this sideward channel. If we can get back into that sideward channel just above 4.444, we could have a really nice move here. In fact, take a look at, we go back to Brent actually breaking out. There we go, it's done it. So Brent has actually cleared the way. It's broken above yesterday's high. It's also broken above Wednesday's high. Look at that. Beautiful move on Brent, just breaking out right now. It's getting above 108, nice psychological level. And let's look at, oh, WTI. Yeah, WTI, there we go. Broken out of that consolidation, just come up and slap bang hit 98.87 Fibonacci level. Next key level 99 to break out of, then 99.58. Oh, lovely little surge there. And gold is getting a little bit of a lift again now as well. Gold back at 13.85. Just put that on the 4 hour. So again, guys, you're long gold at the moment and you're really wondering what levels you're looking at to take profits and so on. Personally, what we're looking at 1390 as the next key level for gold. It's a psychological level. So if we can clear up 1390, we may see some pending orders get triggered at that level. We may see additional buying. We'll certainly be watching out for that. And 1400, our eyes would certainly be on that as a key level. That would represent a 250-point breakout from where we've entered into this trade at 1376. So we're currently up on this trade circa around 90 points. It's just shy of 1385. And we'd really love to see a break above 1390, come up to 1400, possibly kiss 1415. It depends how exaggerated this move is going to be this afternoon, but we're getting a really nice move on this right now. Let's take a look at coffee. Coffee has done it. I wondered whether we'd see this. We've had inverse hammer, 3 days of inverse hammers here on coffee. And we finally broken through yesterday's low. We broke through Wednesday's low. You can see that consolidation. We were going to get a breakout in either direction. Coffee getting a little bit of support here at a key moving average. You can see just here right now. I do think if we can break a little bit lower, in fact, it's on its way at the moment, that we may come back and kiss this previous Fibonacci level at 180. we could get a move there. Depends if coffee ramps up here and we start seeing some stop losses triggered. Obviously, traders who've been following this trade to the upside is typical for portfolio managers and fund managers to trail their stop underneath the daily lows. So we should start to see a few stops get triggered for those who've been long. We may see a pullback just to the 180 level on coffee. I'll be watching out for that. The other key level to breach is, of course, 210 here to the upside, but we're getting a bit of a pullback. That's following through a little bit to some of the other softs as well today. Copper is another really interesting one. Copper getting a nice lift here from the move that we're getting on gold and silver. Copper at the moment, I'm on the futures contract, but there's been a really nice level of inflation here. If you go onto a historical contract with and a major 50% Fibonacci level going back to 5-year lows, 2008 lows to 2011 highs, at the 50% level there is exactly where copper has bounced off at the moment. So I'd be watching here on copper to see if we're going to get a reversal at that 50% level. It's very common for markets to reverse on a longer term major key level like that. So we're looking out to see if we get a reversal on copper. Obviously, if gold and silver continue to break out, this will help copper to the upside here as well a little bit. So another key level I'd like to see copper manage to breach it would be 3.050. So going back to Mahmood, your question there on copper. Okay, so what we're looking at on copper, we've been short copper for most of this month. We've had some really great breakdowns in price. If we continue to sell short, sell short. We hit our profit target this week. It's not showing on this chart because I'm on a futures contract, but even on a historical chart, we've hit the 50% level, very important level, just right where the low of these candles is, around 2.969. So for the time being, if I was going to continue short, I need to see this week's lows taken out. We're forming a consolidation. We formed a consolidation all week. For a further confirmation for a buy side here, I'd like to see the price get back above 3.05 for upside momentum here, and possibly we might be lucky and catch the bottom of this pullback on copper at the moment, possibly, but we'll see. But we will be taking that as day trades as well as swing trades, but we do like the look of copper at the moment if it continues to follow through with gold and silver. My personal view on copper at the moment there, Mahmood, we do have a long position in copper, which is based off a day trading strategy that we use, that we are in currently at the moment. So we've had this nice consolidation right near a key level of support that did trigger to the upside. For a swing trade, though, at the moment, it hasn't confirmed. I would personally, to get into a swing trade and see copper break above 3.050. So this day trade, I may even close by the end of today. If we move across and we take a look at also Payne's worth a quick look at here, just bringing up a very clear chart here just so you can see really visually where we're at with Palladium. We can see it's following through. We've come all the way back up to the 2013 highs here as well. So potentially you can see how key this event area is for Palladium. We've come and kissed that resistance level of 2013 at 786. A breakout above that could be very lucrative. We've got a nice on the daily here, we've got a nice, on the weekly actually, a nice dragonfly doji. Let's check out the daily here. Yeah, you can see just a bit of profit taking right now. It's not fully formed at the moment, but go back out to the weekly and see how strong, Palladium has been this year so far. If we go out to the weekly, there you go. You've got a really key resistance level, very visual there on your charts. You know, Palladium's a great one. It chops, you know, from high to low, high to low. You can see here how many trade opportunities there were just to get in on the support, close at resistance, but it's now breaking out to 2014 highs as well. Let's just quickly take a bird's eye view and just see which markets you should really be keeping an eye on right now. 100% keeping an eye on gold at the moment. Nat getting interest as well, might just come back and kiss 4.5 here. Silver as well, looking good, broke out of that downward trending channel. We've got a nice move on, the WTI move is on at the moment. Got a nice breakout from that consolidation. Brent just came up and hit a key Fibonacci level. And coffee looks like it's going to might come down and just come down and kiss that Fibonacci at 181. So really topics at the moment, I keep an eye definitely on gold this afternoon. Look at palladium above 787. Keep an eye on copper to see if we break above 3.05. WTI crude oil, this trade we're in already, but I'd look to see if we can get up to 99, possibly 99.55 at a stretch. Brent's already hit a profit target, 108. Silver at the moment, it's just consolidating, just fib level 2160, and natural gas, we'll see whether we can just bounce off that fib level at 4.368. Excellent. So with that, that's the technicals. Let's just take a look at the key news announcements that we need to pay attention to. 6 major announcements we need to look at next week, which is going to affect our commodities trades, okay? So next Monday, 17th of March at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the New York Empire State Manufacturing Index. That will have an impact on gold and silver and the US dollar index. So the Empire State Manufacturing Index rates the relative level of general business conditions in New York. So a level above 0.0 indicates improving conditions. Below that indicates worsening conditions. That reading is compiled from a survey of about 200 manufacturers in New York. Tuesday the 18th of March at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US core CPI. That index measures the changes in the price of goods and services, excluding food and energy. So it's a key way to measure changes in purchasing trends and inflation. That will have a big impact on US dollar, also gold and silver as well. You want to watch that one. Higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. Next Wednesday, another good one for your crude oil, your energy trades, crude oil inventories. This is a great announcement every week, every Wednesday, 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time. So that data reports a number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. Higher than expected reading should be taken as bearish for crude oil. A lower than expected reading should be taken as bullish. And then as we move into next week, Thursday the 20th of March, 4 p.m. Central Africa time, 8 a.m. Eastern time, we have the US existing home sales. That measures the change in the number of annualized existing residential buildings that were sold during the previous month. That report helps gauge the strength of the US housing market, and it's a key indicator of overall economic strength. Higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish, inversely correlated to gold and silver. Thursday the 20th of March, another big one for gold and silver. We have the Philadelphia Fed Manufacturing Index. That's a 4 p.m. Central Africa time, 8 a.m. Eastern time. That index rates the relative level of general business conditions in Philadelphia, okay? So a level above 0 on the index indicates improving conditions, below indicates worsening conditions. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish, inversely correlated to gold and silver. And then Thursday, 20th of March, we have the US natural gas storage reports. That's great for trading natural gas like clockwork. Every week we have a nice tradable announcement there. The Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst that is a US indicator, it also tends to have a greater impact on the CAD as well, due to Canada's sizable energy sector. So it's important because the CAD is correlated very much so to natural gas prices too. So those are the 6 announcements you want for the diary for next week for your commodities trading. And of course, if you would like to take your trading to the next level and find out more about the upcoming Gold and Silver Club Masterclass, the next workshops we have coming up in towards the end of March and in April as well, you can find out more about that and also how to get access to our live trading rooms and join our exclusive international community of traders. You can very simply go to www.jointhegoldandsilverclub.com or contact us at our Johannesburg office. The number is just +2711 083 8403, or email us at office@thegoldandsilverclub.com. So you can find out more information, very straightforward there. And also, if you'd like to subscribe to our newsletter, you get free weekly gold, silver, oil, natural gas, commodity currency news, live market analysis and prices. So do take advantage of that as well, just so that you are kept up to date with the latest commodity news. Okay, so I'll leave those numbers on the screen for you there, so do feel free to get in touch with us to find out more about that. That's pretty much a wrap for today's session, guys, so good luck for all of your trades today, and good luck for next week as well. Thanks to ACM for putting on today's webinar. We'll definitely catch you back here same time next week. Have a great weekend, and we'll see you on the next one. Okay, take care everyone. Bye-bye.